I happen to be a kick-ass accountant.
Hey everybody, welcome to the Accounting 240 Week 4 weekly virtual meeting. Let's get started. Before we get started, I've got 16 people with us tonight. They want to ask some questions about tax. Does anybody out there have any questions before we get started on what we're going to be doing this week? Anybody at all? We did have a little brief discussion before I started recording. Seems like I'd forgot to press the record button. Shucks. All the more encouragement for you guys out there to show up and attend these meetings so you don't miss out on all the great little tidbits. We talked a lot about, I don't know, CPP and EI. It was magical. We had a great time. So does anyone have any questions before we get started? The group that showed up tonight? If not, we'll, I don't know. What do you guys want to do? Here are your options. I can do a little bit of stuff on the T4 project. I don't know if people need that, or we can just jump right into doing some CCA problems. I've prepped a bunch of CCA problems. We are in week 4. And week 4 on your course outline corresponds to capital cost allowance and calculations. So I've got a couple of questions about CCA stuff. I'm happy to go through some of that crap with you guys. What can I do for you? Anything. I can explain societal concepts, if that's what you want. Plumbing, sewage, property taxes, littering. I don't know. What do you guys want? Can we review when we use boxes 57 to 60 on the T4? I have no idea what those boxes are. 57 to 60? Can we review that? I mean, I can look at a T4 if you want, but I don't even know what those boxes are. Let's see. Okay, so here's a T4. I'm just going to scroll down. So down here, if you read down in the T4, it'll tell you what the boxes are for. 57, employment income, March 15th to May 9th. Employment income, May 10th to July 4th. Oh, it literally says right here, do not report these amounts on your tax return for Canada Revenue Agency use only. Amounts in boxes, blah, 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 are already included in box 14. So you're asking about these boxes? I literally have no idea. I have never used them in how many years have I been an accountant? I'm pushing 20. I mean, 18 years. I've prepared thousands of personal tax returns. I've never seen these boxes in my life. So I don't know what they're for. Your guess is as good as mine. I'm willing to go on record. This will be here on YouTube forever. I have no clue. I don't know. That's the answer. Any other questions for me, guys? Sorry if that's dissatisfying, but it's never come up. Any other questions for me? That was great. I appreciate the question, Cindy. Sometimes I don't know the answer. There was a video about it by me. I made a video about it, Cindy. Because I know I've certainly never made a video about those particular boxes because I've literally never heard about them. No, on the course videos. Yeah, well, I can't tell you exactly. If there was a video on those, then all the information that you probably need about them is in that video, but I don't have any information on that. And I'm also looking at you and telling you I will literally never ask you anything about any of those boxes. The absolute most that filling out a T4 is going to be on any kind of exam is like 5 marks out of, who knows, 80 marks or something like that. And it certainly won't involve those boxes. And that's not an excuse for me not knowing them, but I don't feel like as a human being, I need to know every little line item on a boring ass tax form. Who works in tax out there? Caitlin does. Do you have any idea? Yeah, I mean, they're just boxes that are never used. I'm impressed that there's a video on it. Maybe there's something in the course pack. Course pack. Chapter 2.
There are amounts that come directly from CRA, so why would...
I'm scrolling down here. Additional codes for 2020 T4 reporting. I don't know. You guys, I wouldn't dig into like the arcana of this stuff. You're going to get really lost. I focus on the main subjects. Like, I don't think those things ever come up in any of the questions that I ask you guys about. And if they're not in any, here's what you're really likely to be tested on is problems that are very similar to the ones that you see in the course pack. And so those boxes, they don't really have any, they're really, I've never used them. All right. Can we go through one T4 problem together, then move on to a few CCA problems? So I can't just arbitrarily do a T4 problem. Like, I have the T4 assignment set up to kind of talk about a little bit, but I don't just have a T4 problem ready. What I have to do if I'm going to go through one of the problems from the course packs is you guys have to let me know in advance, and then I'll just prep it. Like, you can check it out. Like, so look, I've prepped. Look, there's a demo problem. I've prepped chapter 3, problem 12. I have to clear out all the information.
I was just going to ask you to do that one.
Yeah, I will do this one for sure, but I want to try and satisfy whatever Dylan wants. But like, I guess sadly my messaging isn't getting across on how I can go about being effective at this. I just I can't randomly throw a T4 together because I just don't have it all set up. It's going to be a really awkward demonstration. My demonstrations are super awkward as it is. Like super clumsy because I'm not a professional. Although I guess I'm technically a professional, but I don't have any training in this. So I'm happy to do stuff like that, but you got to give me a heads up so I can prep it. I hope that's okay. I hope people understand that. Thanks, Dylan. Sounds good. Let's do chapter 3, problem 12. How did you know? And then what is this? Nushin says bonus and gift cards are related to box 40. Yeah. So if you want to take a look at box, I mean, where's your T4? Here's your T4. Boom. What does box 40 say if I go down here? Let's do. There it is, guys. It's literally says it right on the T4. Other taxable allowances and benefits. So Nushin was asking about bonuses. Bonuses would be included in your remuneration. This says allowances and benefits. A bonus isn't a benefit. It's part of your remuneration. It would be included in your employment income already. So if you got an allowance or the benefits, so you're asking about specifically, I guess, the gift cards. Yeah, gift cards would be included in a box 40. So you could add up all the box 40 items and do one box 40, or you could do multiple box 40s. I don't care. Either way, it's fine. Problem 5, chapter 3. How did you know? So again, to the Gurpreets of the world, you need to tell me before we get together which problems you want to do. Right? That way I will prepare them for you, but you can't tell me when we're meeting. It's not a thing I can do. I can't make magic happen. Okay, thanks, guys. Okay, so back to it. Here we go. I will tell, what time is it? 8:04? Okay, I'm going to do a couple minutes on the T4 project because for my own health, so that I can limit people's mistakes on these things if possible, to the best of my ability. So we'll do a little bit really quick on the old T4 project here. So here's my T4 project. There it is. So we have this proprietorship that's established. It's the brewing company in 2010, operated by this lady, and she's grown the business. Who cares? She has two full-time employees. That's what we care about. The address is very important. Her name is also, or the name of the business is also very important. Please spell the name of the business correctly. I sort of get the impression sometimes, and I don't want to get on a pedestal about this, that I just need that people maybe don't think that the spelling of these things is really important, or getting the numbers slightly wrong is fine, or writing me emails and calling me you, the letter U instead of YOU, is like professional. But it's really, really important to to spend some time on attention to detail. I get a number of people who spell the businesses wrong and the people's names wrong. And if you're getting into accounting and you're doing this kind of data entry and this kind of attention to detail role, it pays to spend a little more time on it. Just make sure you get the names right. Most people are nailing it, but once in a while I get wrong names. I'm like, just be careful. So here's the address, and we've got a business number and social insurance number for Sunny. And then it's February 2021, and you are a second-year accounting student. Hey, you guys are second-year accounting students, and you've been hired to complete some T4s for 2020. Cool. So we've got Schlitz Brewing. They have one payroll account. Sunny's completed the payroll herself during the year. She needs help with the T4s. That's what you're going to do. She doesn't know how to enter the taxable benefits into the form. No problem. So here's the following information. We've got this lady, and we got some salary information here. We've got some personal information for her. We've also got, hey, a taxable benefit. So we've got $3,000 worth of life insurance policy, taxable benefit. That's got to show up somewhere. That is one of those benefits that I assume is going into box 40. There's also going to be a registered pension plan. So that's going to show up on the T4. I'll show you where we can see that for $7,500. And then there's a pension adjustment that you're going to punch into straight to the T4 as well. We've got professional dues paid for. The dues in 2020 were $1,300. Yeah, is that going to have any tax ramifications? Ooh, I think that's what people were asking about maybe on the discussion board. But for me, this is just a wash, right? I think I explained this on the discussion board. They pay for the professional dues, which would be a taxable benefit, but then she can deduct them. So it's a wash there. So tax deducted from Kamiko's paychecks during the year was $37,320. These are just numbers that we're going to punch into the T4. Then we've got Manjeet here, and we've got some more information about him. Anything that's interesting here? Oh, there's going to be a standby charge that you have to calculate, maybe an operating cost benefit. Private vehicle originally cost. Yeah. So there's going to be a standby charge and operating cost benefit. And then there's going to be an employee loan benefit that has to be calculated for Manjeet as well. And that's going to have to be included. And let's see, here we have these numbers that you're going to use. We have numbers that have been discussed a lot tonight. Those numbers are both going to be included in the T4s for both of these employees because it looks like their income exceeds those amounts. Here are the maximum withholdings. These are the maximum amounts that have been withheld from both of those employees' paychecks for the year. Those numbers are going to go into the various boxes on the T4s for those guys. So as well as a $12,000 Christmas bonus, it says it's already included in the payroll amounts. This is something that people did a lot last year where they would add an extra $12,000 or they would put it in box 40. This is not a benefit. It literally says right here, it's already included in the payroll amounts. That $12,000 for Manjeet is included in the 81,000. For Kamiko, it's included in the 137,500. Please don't put in any extra boxes with $12,000 worth of bonuses. That's not where they belong. They, as stated below right here, these Christmas bonuses are already included in the gross payroll amounts. So why would you include them twice? And to note, just to be clear, if you were to add an extra $12,000 on a number that literally says it's already been included, you would be including an extra $12,000 of income for an employee, and they would have to pay tax upon that. Would they be happy about that? My guess is they would not be happy because an extra $12,000 would amount to probably around $2,500 worth of tax. And that would be a bad thing that you did for whatever employee you were preparing this T4 for. The likelihood of you getting fired is like greater than zero if you were to do something like that. So make sure, and I hope it's clear as to why. Those bonuses are already included. So all I'm saying is don't add income to people's T4s when they don't have any additional income. That would be sad. So they gave Christmas gifts. We got a 2,500 BC liquor store gift card. Is that a taxable benefit? Is that a taxable benefit? You get a gift card to a liquor store. Is that a taxable benefit? Caitlin says no. Caitlin, if your employer just came to you and gave you $2,500, would that be a benefit? Ryan asked out of curiosity.
Yes, it would be. If they gave you
Absolutely.
$2,500.
Right? This $2,500 right here is for sure a taxable benefit, right? If I have a gift card that is worth, I mean, you can't just go to your work and have them pay you in gift cards, right? This would be a way to avoid paying tax. What's happened here is this person has effectively received $2,500 from their employer. So that has to be included in income. So that is going to be included in two different places. It'll be included in box 40, and then it'll be added to whatever else you put in box 14. It'll be a component of box 14. Box 14 consists of all of the salary and remuneration, bonuses, et cetera, and it also consists of taxable benefits. So also allowances as well. So Manjeet received a set of crystal glassware valued at $400. Guys, is the $400 a taxable benefit? Is that going to have to go in like a box or anything anywhere? Any thoughts on this one, guys? Guys and girls. Guys, is that the correct pronoun? I don't know what I'm supposed to say. I can't find the chat. Where's my chat? Sometimes the chat disappears and I can't find it, and it's gone forever. Oh, here it is. Gosh, I was getting a lot of chat things, but I didn't see it. So yes. And I got no. Yeah, it says it's under 500. If that was a gift card for $400, it would be a taxable benefit because it's some crystal glassware, presumably some sort of beer tie-in, right? Hey, you work for this beer company. Here, have a bunch of awesome glassware you can drink your beer out of. It's worth $400 because it's non-cash. Correct. This is a non-taxable benefit. So this won't show up anywhere on the T4. Good job, guys. Nailed it. Just be careful. Everyone wants to go like, yeah, it's less than 500. It's less than 500 and it's non-cash. Those are the two key components, right? If this were cash or equivalent to cash, like a gift card or cash money, then it would be a taxable benefit. So that's cool. And then it says they're required to travel. Okay, so travel is a big deal here. When you're required to travel, you need to incur some employment expenses. Then you need to fill out this, have your employer fill out what's called a T2200 form, in which the employer says, hey, we're the employer. We require this employee to incur some travel expenses while they're working for us. Otherwise, employees would just be like, hey, yeah, I'm definitely incurring all these expenses for work, so I'm going to deduct them from my income. The CRA is going to be like, wait a second, did you have to incur these expenses for your work, or is this just you trying to deduct your personal expenses? So then the CRA can have a look at that T2200 where the employer says, hey, we needed you. We required this employee to incur expenses and pay for them themselves. Therefore, they are able to deduct it. So that's why we've got that information in there. Kamiko likes to use her own vehicle and receives an automobile allowance of $575 per month. That's an allowance. That's going to have to show up somewhere. She's not required to be away from the municipality for more than 12 hours. Pays her own operating expenses for the vehicle. Oh, if she pays her own operating expenses for the vehicle, that's interesting. You look, see that's, yeah, she uses her own vehicle. Okay, so if she pays her own operating expenses, there's potential for deduction there, but it doesn't seem like it says what that is. So interesting. Sunny remitted 76,000 in payroll remittances. This would get chucked into your T4 summary. And then you've got an office phone number. So here are the things that we need you to do, which are, I've lost the chat again. Makes me so angry. Not really angry, but okay. So use the information provided. Prepare one T4 for each of the employees. That is 2 T4s. One for Manjeet, one for Kamiko. T4 summary. That just summarizes the amounts that are in the T4. So you basically add the numbers up in each one of the T4s. And then you complete the T2200. Just make sure you read through it and then merge all the documents into a single merge document. This is so key to me not losing my mind. If I get 4 documents, guess what? It takes me 4 times as longer to mark. So as long as you're comfortable with that, go ahead and submit 4 documents. But really, just submit the 1 document. And just be careful. Don't try and submit this 2 minutes before it's due, because some people have a really tough time creating these merge documents. Okay, so really try to have this done well in advance of when it's actually due. There are no late assignments accepted. And if your reason for handing in a late assignment is that you couldn't figure out how to merge the documents, you've had weeks to figure that out, right? I hope that makes sense. And then, yeah, use the file naming format, last name, first name. But don't use my name, use your own names, your last name, your first name, and then T4 project would be extremely helpful. A lot of people just name it T4 project, and then I don't know which file it is. And then all the files get goofed up on my hard drive. I mixed up and I can't figure out who submitted what. So let's take a quick look here at a T4. Hey, there's a T4. Looks nice. We're going to make 2 of these T4s. You've got these nice fillable ones. My screen's struggling a little bit here. My computer really struggles to deal with all of this information. And then we have this info here. Okay. Am I sharing the screen right now? Yeah, still am. Okay, good. What time is it? Okay. I'll move on to the CCA stuff soon. CCA stuff's pretty easy, so it won't take me quite that long. So look, let's do one of these things. This is how we'd start off for Kamiko. We'd go Kamiko, we don't have an initial for them. Make sure you get the employer's name, which is Schlitz Brewing. Whoop, not Brewing. Tax year is what tax year? If it's February 2021 now, that means you are preparing the 2020 T4s. You would not be preparing 2021 stuff. So sometimes people submit, oh, this is the 2021 T4. It is definitely not. It's for the year 2020. Make sure you get that right. And so box 14 is going to be the tricky one, guys. Box 14 is usually the one that people get wrong for people like Kamiko. So there's going to be a bunch of things included in box 14. And my advice to you would be maybe whip up like an associated spreadsheet somewhere where you can tally up the amounts that are going to go into box 14. So let's see, blah, 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 2 full-time employees, Schlitz Brewing. And so for Schlitz Brewing, you'd want to include all the information here, like 1, 2, 3, Mars and Street, etc. Make sure that you include all the relevant information. Don't write in etc. That would be silly. There's a business number. Employees, write it in as the account number. 5057 4399. Like so, that's good enough. And then social insurance number. Hey, Sunny's social insurance number won't go on anywhere here. And actually, that's wrong. That's not the employee's account. Oh, that is the employer's account. Sorry. Yay. Okay, so here's Kamiko. Make sure you get the social insurance number 1 2 3 4 5 6 7 8 3. And then these boxes here, there are no exemptions. As far as we know, this person isn't exempt from contributing to CPP-EI, and I don't even know what PPIP is. I don't want to know, and hopefully I never will. Province of employment, looks like British Columbia. There's a little drop down right there. And then we kind of move through. We've got Kamiko Kolsch. We've got her address, 852 Frothy Road. Is that what it's called? Victoria. And then your V8 V2W2. So there's that info. A couple of years ago, blah, 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 blah. First number up here. So earns a salary of 137,000 per year. What I'm going to try and do is highlight, okay, right here. Yeah, that's going to be a part of box 14, but there are going to be other elements that ultimately add up to your box 14 number. So anything in green, I'm going to say, yeah, you're probably going to dump this into box 14. Term life insurance policy. Is that a taxable benefit, guys? If an employee receives life insurance premiums paid for by their employer, that is also going to be, that's a taxable benefit. So you're going to have to add that to the 137, right? That's going to show up. Now that 3,000 is also going to, as a benefit, show up in one of these boxes. So I know that it's box 40. I don't think it's anything else, but I can, if I'm confused, I can scroll down. Another thing, another major area. So the areas that people screw up on this all the time are they get box 14 totally wrong. And there's maybe 20% of people get box 14 correct. And people will put in the wrong boxes, these extra boxes down here. So if you take a look at the descriptions down here of what goes in these boxes, 30, no, 31, 32, travel and prescribed medical assistance. Okay, so 34 is going to be important. That's the automobile or motor vehicle. That's going to come up for Manjeet. Interest-free and low-interest loans, box 36. Manjeet's going to have one of those as well. Security options, benefits. We're not doing any, that's stock options. We don't have anything to do with that in this course. Other taxable allowances and benefits. Okay, that's where that life insurance bit comes in. So you could then scroll up in your T4. You're going to click right here. You're going to go box 40. You're going to go, yeah, $3,000. Okay, is that right? What I just did right there. Can you guys read it? I don't even know. Okay, people are yelling no. How come it's not right, folks? Because that's, how many bucks is that? It needs the cents. Now that is some sense. That's sensible. Okay, that's the way you fill that out. You must have the pennies in there or else. And I've had, you probably get about 5% of students will submit all of their numbers are off by a factor of 100. And that's not great, right? That's not great. You can't do that. So I got a question in the old chat, guys. Missing a 00. It was missing a 00. Oh, I see what you did there. I see what you did there. And you know who's impressed? George Lazenby as James Bond is impressed. That's a little inside for people out there who like things like that. Okay, thanks, Benoit. I love it, buddy. Okay, so a couple of years ago, Comico negotiated Schlitz would also make employer contributions to an RPP. Both Comico and Schlitz contributed 7,500. Hey guys, there's 70. I'm going to highlight this number. Now this number is going to go into the RPP contributions. Like so. That shows up there. Did I put it in the right? Oh, I didn't put it in the right place. Sorry. That's the EI premiums. Good thing I read these things. Like that. Sunny informs you the pension adjustment to be recorded this year is $15,000. So here it says pension adjustment. There you go. There's $15,000. Nailed it. These are all free marks, guys. I'm giving these puppies away. Schlitz Brewing also pays professional dues for Comico. The dues paid in 2020 were $1,300 dues. So I did discuss this on, I believe, the messagey boards. But there's not going to be any effect of this whatsoever, the dues that were paid. This is not a what we would call a taxable benefit here. So this isn't going to show up. It's not a taxable benefit because it's deductible and taxable at the same time. So they basically negate one another. S14, let's just make sure I'm doing this right. S35. Yep. So there is no for 1,300 here. This doesn't show up anywhere. Okay, I'm going to put a little red light on that. Red light means danger. Tax deducted during the year was 37,320. Hey, what are we going to do with that? I'm going to go up to income tax. 37,320. Okay, there's that now. Make sure you get the pennies right. And then there's some stuff for Manjeet here. Manjeet. Not going to do that stuff. Hey, here's maximum CPP and EI. Guys, these are your favorite boxes. Look, it's happening. Guys, we did it. CPP pensionable earnings are the maximum. Is everyone okay with why these are the maximum? I didn't mean to freak out earlier. I know it sounds like I'm freaking out sometimes. I don't spend a lot of time thinking about these afterwards. So those are the numbers that you're going to be using. EI and earnings. Her employment income is already, we know, at least 137, and we know it has at least another 3,000 that's going to be dumped in there. So for sure, it's the maximum. So those are the maximum numbers that you're going to plug into boxes 24 and 26. Hope people feel good about this, but let's see what the chat says. Okay, people are feeling good in the chat about this. I'm glad, okay? I mean, honestly, guys, I want everyone to get 100% on this. I just want to look at it and eyeball it and see that it's right and just give everyone 100%. That's what I don't want anyone to get anything wrong. I'm not trying to trick anyone. I want everyone to get all the answers right because it's so much easier for me to mark. And then everyone's also happy with me or themselves. There's just happiness around. So what else can we do with this here? We've got $12,000 Christmas bonus. We talked about this is already included, so don't do anything with Christmas bonus. That's out of there for sure. And then we've got Kamiko received $2,500. Oh, well, this has to look, that's going to have to get included. $2,500 BC liquor store gift. You could throw in another box 40 if you wanted. Box 40 25000 Dunzo. Manjeet received a Gillespie. He's not going to do anything, but Manjeet, we're going to travel duties. Kamiko likes to use it. Look, $575 per month, guys. She gets an allowance. Aha. Haha. Okay, do you know what this statement is here for? Kamiko is not required to be away from the municipality for more than 12 hours. When it says that, that's in order to be able to deduct those travel expenses, you're supposed to be away from the municipality for more than 12 hours, meaning she's getting an allowance, but she's not going to have any related deductions. At any rate, related deductions do not show up on a T4. If there were deductions that she could take, they would not show up on a T4. As I explained, I believe in a discussion board post, they would show up on a form called a T777, employment expenses. So what has to get included here is that allowance. So we need to take $575 per month times 12 months. I want to say it's $6,900. I want to say that that's true. I hope it's true because I'm going to go box 40 and I'm going to go $6,900. If anyone wants to correct my math, they're certainly welcome to do so. But I think that's it. And then blah, blah, blah. Anything else? Oh, well, is there anything else we haven't figured? So we're still waiting on box 14, but I think we're almost where we can fill out box 14. I need to fill out the CPP contributions. The CPP contributions, because she's reached the maximum earnings for the year, are going to be the maximum withholdings. So the CPP contributions are $28.98. And then there's no QPP contributions because this is not Quebec. And then EI premiums are $856.36. That's the max. Okay. Huh. No union dues, no donations, no, I don't know anything about, do we have an RPP registration number? I can't remember if we did or not. Oh, here it is. 1, 2, 3, 4, 5, 6, 7. Wow, clever. Whoever wrote this. 1, 2, 3, 4, 5, 6, 7. If you missed that one, I would not dock you any marks. I don't care. But there it is. And so I think the only thing that we need to plug in here is box 14. So box 14 is going to be equal to 137,500 plus 3,000 plus the 575 times 12 plus 2,500. So basically everything in box, all the box 40s. Let me see if I can do this in Excel here really quick. So this equals, we're going to have 137,500. Is that what it was? Plus, I want to say 3,000 plus 6,900 plus, was there anything else? I think there was one more thing, but I can't remember what it was. Oh, the gift card, 2,500. So this equals the sum of these things. 149.9. Boy, I don't know if that's right or not. It'd be so embarrassing if it was wrong. But I think that's right. Guys, I think that's it right there. That's your box 14. 149. Do you want to see it huge? Whoa, it's huge. Look how huge it is. 149,900. It's all those things together. So I'm going to jump back into my little T4 poo here. And I'm going to go 149,900. Oh. And that is how we make a T4. That's 100% correct. If you have all that information in there, you're getting that T4 right. Okay. Now I see there's some comments in the chat. Let's check out the old chat here. CRA, but you put dot before some of the zeros there. You could put a dot, but you don't have to, which it shouldn't be. Does it matter? Doesn't matter. Doesn't matter at all. Anushin helps me out with 25. Guys, that's the T4 for our friend Kamiko. Now, does anyone have any more questions about what you want to do for this project? Any specific project related questions that you guys have? Here's a T4 summary. Make sure, again, you're going to have the employer in here. Schlitz. Oops, I'm spelling Schlitz wrong. Etc. The account number that we had earlier, 2020. Total number of T4 slips, guys, it's 2. Employment income. Here in box 14, you will have a total of both of the box 14s. So you're going to have box 14 for Manji, you'll have box 14 for Kamiko. You add up that number, it goes right there. Total of the RPP contributions. I think that's just 7,500. I don't know if the other person is part of the plan, are they? I don't remember if they were. Manjeet was in on that plan. I think not. Pension adjustment is that. Now you got to deal with employees, employer CPP contributions. That should be fairly straightforward. Add up those things. The employer's EI premiums is going to be the total of the employees' EI premiums times 1.4. Most people don't necessarily get this one. Take box 18 times by 1.4. That's your employer's EI premiums. That's what the employer is responsible for paying, 1.4 times what the actual employee pays. Total income tax deducted. Just add up the box 22s. Like all of these boxes, if you have like a box 16 that's been filled out in your T4, then add up those boxes, right? Total of 2. And then it really just flows downwards. Down here at the bottom, signature of authors or authorized person to contact about this return, it's you. Don't write my name in, that'd be weird. It's you. And then I'll let you work a little bit through this on your own. All right. I don't want to do the whole thing for you, but do we need to include the province in the employee address box, or is it fine because it's included in box 10? Do we need to include it in the employee address box? Are you talking about the T4, Jaden? Okay, so let's take a look again at the T4. You should include all the information that you have. Let me just see here. So the province up here. Oh, the BC. Oh, I mean, I don't know. It doesn't really matter. Probably smart to do. It says province of employment BC, and so I'm satisfied with that. I don't think you have to do it, but it can't hurt. Okay, that wouldn't make a difference either way, because people would know that it's Victoria, and also you've already clicked BC. So I think that's fine, Jaden, but thanks. Good attention to detail. I like it. Any other questions that you guys want to have about the T4? Project Deepoo. I kind of want to get on to doing some other stuff. Here's my T2200. Just read this. There's so many people, the people screw this up when they just don't read it and they just click all the boxes. Just read through it. The whole point is just so you have a little bit of exposure to what this means. It literally is a declaration of the conditions of employment wherein the employer is like, hey, we need this employee to incur some expenses. So read through each question. So the employee information, you'll have Kolsch, Komiko, etc. 2020, blah, blah, blah. Job title and brief description of duties if you want. I don't know what she does. I can't remember. Loves beer. Did this employee's contract require them to pay their own expenses while carrying out the duties of employment? Well, you know that that's true, right? If no, the employee is not entitled to claim employment expenses. But it's not no. 2, did you normally require this employee to travel to locations that were not your place of business or between different locations of your place of business during the course of performing their duties? Well, yes, we know that that's true. If yes, what was the employee's area of travel? I don't know. Does it say? Then you got to be specific. I can't remember what it says. It's either in BC, etc. Did you require this employee to be away from at least 12 consecutive hours from the municipality? Well, we know that that one was a no. Oh, right. Indicate the periods of employment during the year from this day to this day. It's the entire year, right? 2020, 01, 01 to 2020. Month is 12, 10, 31. Oh, I screwed that up. There we go. Etc. Did this employee receive or they entitled to motor vehicle allowance? Yeah, they did get one. The amounts as a fixed allowance. This is flatly, okay, if the amount received as a fixed allowance, such as a flat monthly allowance. I never know what to write here, if I'm supposed to write the 575 or the entire amount. The amount received as a fixed allowance, such as a flat monthly allowance. I mean, you could write 575 per month. That'd be fine. Amount of the allowance that was included in the employee's T4 slip was $6,900. There is no per kilometer rate that was used. Did this employee have use of a company vehicle? They sure shit didn't. They used their own car. But Manji, well, we're not doing a T2200 for Manji, but they would have been different. And then you just go on from there. If there's nothing else applicable, you can just click no for everything. It's not a very hard form to fill out, but I find that students don't always fill it out correctly because they're bored of the project by this point. Anyhow, that's it. That's all I have to say about this thing. I think you guys are more than capable of crushing this thing. I want to give 100% of the people 100% of the marks. I know you don't believe that that's true, but I legitimately would rather that everybody just did a perfect job on this. So I've walked through a good chunk of it at this point. Does anyone have any other questions that they'd like to ask me about how to? Okay, so Thea has a question here. It says, for the T4, only the first half is fill-inable. Yeah, that's all I want. You don't have to fill in the second half. It's the same information, right? The second half, that's a good question. Sometimes people really spend a lot of time trying to fill in the second half bit, but I'm glad you brought that up. And maybe I should, yeah, so look, here's this second thing down here. All this isn't fillable. You don't need to. Don't fill that in. Just do it once. Because people will go to great lengths to try and fill that second half in, and I don't need it. I just need it filled out one. I only need one T4. I don't need multiple copies of it. Because what this generally is you'll have an employer copy and an employee copy or something like that. But I don't know. This is fine the way it is. Okay, thanks for the question. Are we supposed to show our calculations also? Well, let's go read the instructions. Using the information provided, PDF documents to sign for, prepare one T4, complete the T4 summary, complete the T20-100, merge the documents. Nushin, I think if you read those requirements, what do you guys think, the rest of you guys? Because what I tend to worry about is if I've been ambiguous on these things. So what I would like some other opinions on whether or not it's clear. And it's fine if it's not. I legitimately want to know where I've screwed up. So is it clear? Were you guys going to show, based on what you've seen right here, do you need to show calculations? I know that for most part in the course, I'm like, yeah, you got to show calculations. But for this, I don't, yeah. So is it, I don't know if it's clear or not, but my intention here is for you guys to not show any calculations. You know why? Can you imagine how boring it would be to read that? I already have to review, what, 70 of these things? Which is excruciating. It's as boring. Imagine how boring it is for you to do it. And then I have to do it 70 times. And then I got to go and look at 70 different spreadsheets where people are doing these. No, just no. There's very few calculations involved. So nope, just submit the PDFs. Just the PDFs, guys. It literally says right there, one single merge document. So I don't know how you would actually have shown that. That would be pretty impressive if you could somehow get them on a PDF, but absolutely not. I don't want to see it. Okay, so hopefully I've been clear about that. If not, guys, fire some questions, that kind of stuff. Fire any questions you want up to the discussion board and I'll answer all those administrative type things. Okay, so right now I'm going to do some CCA questions. Here I go. I'm jumping into some CCA right now, but I'm going to do a little bit of a, which one am I going to do first? I'm going to kind of queue it up on the right, and then I'll do my little cheese ball, cheesy guy intro. I'll start with, which ones did I line up? Oh, just by virtue of luck, I actually lined up chapter 3, problem 5. Ha! Okay, so I think it was Gurpreet. You're in luck. You get chapter 3, problem 5. So that's the first one that I'm going to do with you guys. I'm closing this now. Closing. I'm just going to close some stuff off up here so I can make my life a little bit easier. You guys talk amongst yourselves. Talk amongst yourselves out there. So I've got 312 and I got to get my course pack ready. Course pack time. Course pack time. And we are in chapter, oh my gosh. I went to chapter 1 with you guys, and now I got to go all the way to chapter 3. I love CCA stuff. Oh man. So we're going to look at problem 5 from chapter 3. Problem 5 is on page 59 of the current version of the course pack. And yeah, I spent some time tuning this one up. So I think I've laid it out in a different way than the solution guide. So then now you have 2 fun ways to do this. Is my way here better? Not really, but it's just a different way to do it. It's actually a little more slick in the solution, but I like this presentation that I'm going to show you guys because it has a nice like cascadey flow to it. If that's a thing that you can have in tax, the cascadey flow of tax. Yeah, Gurpreet's stoked. Should be, bro. Or Gurpreet. Sometimes Gurpreet can be like a guy's name or girl's name. I'm not 100% sure all the time, but you don't have to identify it. Either way, it's fine. Doesn't matter. Okay, so Gurpreet, awesome. Awesome, awesome, awesome. Depends on how you spell Gurpreet, I think. So anyway, we're going to get into chapter 3, problem 5 right now. And I'll do my little intro. Hey, everybody. Welcome to the Accounting 240 demonstration of course pack problem number 5 from chapter 3. It's on capital cost allowance. Everyone's dreams are coming true. We're going to do it right now. So hold on to your hats, guys. Buckle up. Go get them, Tiger. Here we go to get them. Tiger, I'm a girl. All right. Okay. Thanks, Gurpreet. It's good to know. Okay, so now I'm going to share the screen. Screen sharing. Coming up. Here's what I've done. I've got on my screen to the left side of the screen, you will see that I have produced a little template. And you guys can follow through with me. It's different than your solution. We get the exact same answers. If you prefer the solution that's in the course pack, go ahead and use it. If people want me to post this afterwards, somewhere in D2L, you can like sift through all the crap that's in D2L to try and find it. Fine by me. So here we go. I'm going to read through. On my right here, I've got the course pack open, problem 5. Sadie's Antiques purchased its only class 1 building, excluding land, for $120,000 in its first year of operations on September the 1st, 2018. Huh. Interesting. In 2019, Sadie's constructed an addition to the building, presumably, for $65,000 that was completed in July of 2019. Then in 2020, management decided to sell the building for $190,000 and buy a larger one to accommodate their growth. Calculate the maximum CCA for 2018, 2019, and 2020. Well, that's what's happening. Here we go. I see an immediate issue with this problem that I hadn't noticed ever in the past, but you know what? It doesn't really matter. Let's work through it the best that we can and come up with like a pretty reasonable solution to this whole thing. That's my plan. So let's start out here. You can see that, let's take a look at one of the little structures that I've got going on here. Let's see if I can make it a little bit bigger for you. There you go. So the way I've laid it out is what I like to do is each class, I'll label the class at the top of the column, and then above it, I'll generally give what the declining balance rate is. Now, not every class has a declining balance rate, but I'm going to put in the declining balance rate here for 4%, and then we'll keep our life as simple as possible. So what I have is UCC at the beginning of the business. This would be the opening balance normally, but I believe this business started on September 10th of 2018. Now, what's funny, if I go back and look at this is what I'm noticing right now, is that if I go back and I have a look at the actual question, they purchased a class 1 building for $120,000 on its first year of operation, in its first year of operations on September. This doesn't actually say that the business starts on September the 10th of 2018. And that's a key component that needed to be included in the narrative of this question. So what I'm going to do as I complete this is I'm going to assume that the business starts on September the 10th of 2018. Any question that I would give you on an exam would be a little more thoroughly vetted than this and would make that clear. The reason that's important is that if we assume that the business starts on September the 10th, then that means we prorate the CCA. Normally, in 99% of the cases, you would not prorate CCA based on the time of year that you purchase something. This is a very, very, very common mistake when determining CCA. You only prorate CCA in the first year of business or the last year of business. So we're making an assumption here that the date of the purchase of this building happens to coincide with the date that the business commences. If you were to assume that the business started on January the 1st, you would not prorate the CCA. And I wouldn't be mad about it because I wrote you a badly worded question. But to be clear, we're going to assume that the business starts on September the 10th, and therefore that's why we're prorating. I hope that I've made myself clear on that. And I'm going to ask the people who are with us today. We've got 16 fantastic people with us here today watching. Hold your questions until I finish the demo, and then I'll answer all the questions afterwards. So if I chop this up and throw it up on D2L, we'll have a nice tidy little presentation. So we're going to go through and start out. These are the in the left-hand column here. I have all of the sort of headings and subheadings that I like to have in order to do a CCA calculation. They may vary from student to student, from instructor to instructor. It's not always going to be exactly the same. I find there's a lot of, is the word consternation applicable here? People get upset when the presentation isn't exactly the same as they've seen in the past. But Brian, I practice the problem doing it this way with these exact rows, but you have slightly different rows. You're going to have to deal with that, Skippy. It's just the way it's going to be. You're going to have some slight tweaks. What's important is that you understand fundamentally what we're doing here. So we're going to start off. Our UCC at the beginning of business is 0, right? There's nothing in that class. And then we have some additions. Now, the additions that we're going to have are 120,000, right? It says excluding land. Now, if this included some component of land, we would have to extract the land part out because you cannot capitalize land for CCA purposes. It's a non-depreciable asset. But here we simply have a building, and this is a class 1 building. The rate associated with that building, as noted above, is 4%. Now, are there any disposals during 2018? There are no disposals during 2018, meaning we have a balance here. And this is the reason that we're doing a subtotal or balance here is that in other instances, we may have an opening balance with some additions and some dispositions. So it's a logical place to do a subtotal. It's not necessarily that applicable during this part of this question, but if you were looking to come up with some sort of strategy and consistent formula for how you approach these things, this could be beneficial. So I'm just going to go that this equals the sum of all these things. I'm going to go this. This is not a good way to approach. This is not a good way to make a statement. I'm going to sum up the opening balance, the additions, less the dispositions, and there's my balance. Now, I am going to deal with 1/2 of the net amount. Now, this is very interesting. I got a question about this on the discussion board, which is, I believe, why I chose to do this one. The date of purchase. The question was, well, I don't understand why, in this case, we're going to be subtracting 1/2 of the net additions instead of adding them. Now, in any case where you guys were in the year 2020 or even 2019, if there were net additions, you would in fact be adding 1/2 of those net additions. But because this purchase took place prior to November of 2018, what was in place then was something called the half-year rule. Now, this is discussed, I want to say, on page 45 of the course pack, and I also have a video or two on it, and there are also other demonstration problems that talk about the half-year rule. So I'm not going to teach the entire half-year rule. This is just going to be me walking through the problem. But here we're going to have the 1/2 net amount. 1/2 net, and I'll even write in net additions for now. What are my net additions for the year? My net additions are $120,000. I am now going to subtract 1/2 of those net additions. The reason being, this is again the half-year rule. Before November of 2018, what would happen is in the year of acquisition, you were only entitled to 1/2 of the CCA you would normally take. And there are a lot of reasons behind that, but now that's not the case anymore. In order to encourage business, what we have is 150% of what you would normally take. But because this question is asking about 2018, you got to know it. And it's stuff, it is actually the half year rule will come back. And I want to say the year 2024. So it's definitely something that you want to know about. So we are going to have our 1/2 net additions equals negative this times 0.5. There you go. We have negative $60,000. This is going to be the amount that is subject to our capital cost allowance calculation. So I do believe I have, and so I've noted in here why this is the way that it is. And now we're going to have to calculate CCA. So the CCA here, I've got a note off to the side. It says note one, CCA is prorated in the first year of business. Again, I've made the assumption that the business starts on September the 10th. So what I'm going to do is prorate for the number of years, number of days in the year that the business has actually been going for, because you couldn't take a whole year worth of capital cost allowance if the business only started on September the 10th. So I will punch in some items over here. So we're going to start off with the amount that is going to be subject to capital cost allowance. It's $60,000, as is indicated right over here. 60,000. Oops, 60,000. I did a little bit extra there. Now the rate is 4%. CCA for the year normally would be $2,400 in a full year. Again, we've made this assumption. We now have to prorate CCA based on the number of days. So from September the 10th until December the 31st is approximately 113 days. Somebody on some bulletin board thing was like, why isn't it 112 or something like that? Who cares? It's close enough. It doesn't have to be within the dollar. It doesn't mean anything. It's $1 or $2 or $3 is noise to me. So here is the percentage. 113 over 365 gives us 0.3096. That's way too many decimal points for any response that I would ultimately want. But because this isn't a final answer, I'm going to allow it. So then we have, so between September the 10th and December 31st, I guess there's some formula that was used here to come up with 113 days. That's fine with me. So the number of days is 113. We've got this percentage here of 0.396 that we're going to be able to use to calculate our CCA. So the way this is going to work is we're going to say 60,000. Our CCA is going to equal 60,000 times 2,400 times 0.3096. Well, yeah, definitely we've got 44 million. That's definitely what I was looking for. Something's gone cuckoo here. So times G16. Where did I screw up? Oh, where did I screw up? Oh, I see it. It's supposed to be G15. Let's try that. Oh, that's a little better. I liked 44 million. I think we should have stuck with that. Notice, of course, we could never take $44 million worth of capital cost allowance on an asset that only cost 120. You can't have more CCA than the actual value of your asset, but okay. So there's our CCA for the year, folks. It's $743. What I have to do now is that net additions amount that I extracted, that isn't gone forever. I only took it out so that I could come up with what the CCA for this initial acquisition year would be. That 1/2 net additions that I took out now needs to go back in. So I'm going to say that is equal to this $60,000. And then I'm going to, for the end of the year, determine what is my closing UCC balance. So that'll be the sum of these items like so. It should be 119,257. If you look at your solution, you'll see that that number is there. Now your solution creates two columns up here and then takes this number and puts it up here and then continues on. I kind of like going in this sort of linear, or if you want to call it linear model, where you just kind of keep working downwards through a spreadsheet, but it does require you to do some copy and pasting of all these little column numbers. So it really, I think this makes more sense to do it this way, because if you had several classes, they would show up over here, and then you could tackle multiple years and multiple classes in a format that makes sense. So this is pretty easy to continue on moving through 2019 now. The closing balance for 2018 is going to be the beginning balance for 2019. So there's my beginning balance. Do I have any additions during 2019? I'm going to take a look over here, and I do have a $65,000 addition. So I'm going to punch in $65,000. of additions during the year. In 2020, now note that because this is a full year, we do not prorate additions or CCA or anything. We're just going to take a full year of CCA. It doesn't matter when you bought something. It never matters when you buy something unless it happens to coincide with the beginning of the business. All right. I think that's the only thing that happens in this year. So there are no dispositions during the year, or disposals, you might prefer to call them. That's fine. Now we have our balance. Just do a tidy little sum. Makes sense. I've got $184,000 worth of UCC. I'm then going to, because it's 2019, 2019 does not have the half year rule. What we have is the accelerated rate now. So, oh, sorry, I forgot to show you guys this that's up here. This just shows you the calculation for the 743. If you're like, this whole thing over here, I don't get how that thing is done. Just do this. 60,000 times 4 times 113 over 365. So we're moving on down along here. We need the 1/2 net amount. Now, 1/2 of our net additions, our net additions are $65,000. We are now in 2019. We are adding something in, but we're not going to do our half year rule. What's going to apply here is the accelerated. So ACCT, right, which is the accelerated investment incentive, which you guys should be familiar with. If you're not, you got to do a little more video watching / reading. So here's the 1/2 net amount equals this times 0.5. We're going to add in 1/2 of our net additions. Our net additions are 65. 1/2 of them are this. We can now sum this up. This is going to be the amount that is subject to the capital cost allowance. Our CCA for the year is going to be dead easy. We are going to take this number. We're going to multiply it by our percentage, which is 0.04, and make sure that we write this in as negative because CCA is a deduction. So I've got 8670. This 1/2 net amount that I took out before, I'll highlight it with a tidy little green. This has to come back in. Whatever I added in, I added it in, it's got to come out. In 2018, I took it out, I put it back in, and I was used to that for like 15 years. The ACC or the ACCII, the accelerated investment incentive, is actually like kind of a newish thing for me too. So it takes a little bit for me to get my head around. But because we added it here, we're going to take it out down here. So whatever you do up above, you'll do the opposite below. And then I'm going to summarize these. And so we'll just take CCA like so. And our ending balance for 2019 is 175,587. We're going to jump into 2020 now. So our opening balance is the same as our closing balance of the previous year. There are no additions during the year, but we do have dispositions or disposals during the year. So the disposals during the year, management decides to sell the building for $190,000 and buy a larger building. There it is, $190,000, and buy a larger one to accommodate their growth. So they sell the building for $190,000. What comes out of our UCC pool is the lesser of two things. It's the lesser of the cost or the proceeds. The proceeds are $190,000. What was the actual cost? Well, the cost is $120,000 plus the additional $65,000. So I believe the total is $185,000. I think I did a little thinger here. So lower of cost of $185,000 or proceeds of $190,000. And maybe over here to the right, if we expand this a bit, maybe there's a little other something. So where does that 185 come from? I guess I could do what? Why don't I do a little like asterisks? And then over here, I'll be like asterisks, total cost, like so. Okay, so there's my 185. So the smaller of 185 or 190 has to come out of the pool. So that's 185. Like so. The balance, oh, check this out, equals the sum of these two things. Okay, I have a negative balance. When I have a negative balance, if you haven't had a chance to read about recapture or watch my awesome video on recapture, this is where we have recapture. You cannot have a negative CCA balance. You can't take more CCA than the actual capital cost of the assets that you had to begin with. So what happened here is that more capital cost allowance was deducted than the actual capital cost of the asset, meaning they over depreciated it. Meaning if you took an extra $9,400 worth of CCA, you now have to add it back into income. And recapture is considered to be income. In this case, it would be considered to be business income. And so we are going to continue on. Now, disposals during the year. I should have done one of these. I like when I've got tidy little, here we go, bottom border like so. So 1/2 net amount is not applicable here. The 1/2 net amount only applies when you've got net additions. Here we have net disposals / dispositions. So we don't do anything with the 1/2 net amount. The amount that's subject to CCA, there is no CCA when you have a negative balance. There is no CCA for the year. There is no 1/2 net amount. What we have here is a problem. We're going to have to recapture, right? Recapture that CCA that we took. We took it, it's gone. Now we got to get it back. So the amount of recapture is going to equal the amount of our negative balance, but this is included in business income. Oh no, wait, this requires an emoji and it's a sad, oh, come on, man. It's a sad face emoji because we don't want business income inclusion, but there it is. The UCC at the end of the year has to be 0. Anytime there's recapture, you cannot possibly have a balance in your UCC pool of anything other than 0. Now that is all she wrote almost, except for I do want to make a little note for note 3 here. And this is something that is beyond the scope of what we've done already. This actually shows up in chapter 6, but we can see that we actually got rid of something that cost us $185,000. And we were able to sell, here's the cost of that item, $185,000, and we sold it for $190,000. We were able to sell the building for more than we paid for it, which means it would actually result in a capital gain and some additional taxes. So you can see down here, the proceeds of the disposition of that building were $190,000. The cost was $185,000, which means there's a capital gain. Why is this in here? There's a capital gain of $5,000. And now we will see shortly that the inclusion rate for that is actually only 50%. This is stuff you don't need to know for the purposes of answering this question, but it's a little add-on because there's probably people who know capital gains and they're like, wait a second, that building, you sold it for more than you paid for it. Shouldn't there be a capital gain? Yes, but the question doesn't require us to do that. So here we have the maximum CCA for 2018 through 2020. Here's the CCA for year 1. I'll highlight it in a beautiful purpley color. Here's the CCA for year 2, also highlighted. And then CCA for this year is, it's a big fat 0. Now notice, if you add up CCA for year 1 and CCA for year 2, they equal 9413, meaning all the CCA that was taken on this building was ultimately recaptured. This is why, a prime example of why many people choose not to actually deduct CCA on buildings, because it does result in recapture, because buildings are quite often sold for more than the initial outlay, which results in any capital cost allowance being recaptured and a business income inclusion, which makes people very, 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 very sad. So we generally don't. We generally don't. Some people do, but we generally don't. So that's the answer to this one, guys. Hope that helped clear things up for you. See you next time for another dazzling demonstration by me, some guy in a hat. Okay, so I'd like to ask, it seems like there's one question in the chat. There's one comment, and I'm going to take a look at it. And if anybody else has questions or comments, now's the time for you to ask them, and I would be happy to answer them. All I have got from Gurpreet is a thumbs up. Dude, that's high praise. I'll take it. I'll take the big thumbs up. How about questions for the folks out there? From the folks out there, not for the folks out there, unless you have specific questions. Does anyone have any questions for me about how to accomplish what we just accomplished together? I'm listening. I don't see any questions. And because I want to do some more CCA problems, I'm going to move on in about 30 seconds. I'm checking the chat. I'm checking the chat. I'm checking the chat. I don't see anything. I don't see anything. Okay, so I think I'll do another one. And the next one I'm going to do, I'm going to save this. file, file, save as, because I want to get this out of the way. I've got so many Excel spreadsheets open, and sometimes my computer is so bad. If I have like 5 Excel spreadsheets open, it'll sometimes crash the whole process. So I'll close that one down, and we'll move on to our next bit of fun for the day. Am I still sharing the screen? Oh God, tell me I'm not sharing the screen still. Tell me, okay, I gotta do a closing piece. Really, it's the one thing I always forget because it's so tiny, the little screen share thing. In question 1, prorate is not considered in part D. Why? Yeah, we can't do that, Gurpreet, unfortunately. I can't go and crack open question 1, part D right now. I've got another question that I'm gonna be lining up. If you have questions about this, is it this problem you're asking about? You guys just can't ask me random stuff about other problems because I don't have that problem in front of me and I haven't looked at it. So I'm going to do another problem. And then if you want to ask that specific question, please post that to the discussion board and I'll do it there. I don't do improv. All right, guys, that was it for problem 5 from chapter 3. Yes, it was problem 5 from chapter 3. We had a great time doing that one. So join us next time for another awesome problem from an awesome guy, who will be someone other than me because I'm just a hipster doofus. Okay, see you guys. So next one, guys, we're going to do here is going to be problem 3-9. I'm going to do 3-9. Okay, 3-9 is a good one. 3-9. Let's see how fast I can do this. I'm going to try and get 2 in. I don't know if it's possible, but I'm going to try and do it. Okay, so here comes. Pause. Hi, everybody. Welcome to the Accounting 240 demonstration problem of Course Pack, Chapter 3, problem number 9, coming straight at you from Ryan out here in Radio Land. It's going to be an exciting one, guys. Hold on to your hats and other items of apparel because it's going to be a dizzying tour de force performance. Up next, here we are, sharing the screen. I have prepared Course Pack, Chapter 3, Problem 9. I've set up a nice little table. If you're dealing with CCA problems that have more than one class in them, it's very beneficial to set up a table such as this. You're going to have all your little descriptive columns off to the left, and then you can basically put in as many different classes as you want, because for the most part, the determination of CCA will lend itself to this sort of tabular format. Now, there are some classes, and once you get into subsequent courses, you'll find that there are quite a few classes that don't necessarily fit this very easy format. But when we're just starting out to learn about CCA, it's actually quite helpful to have a structure so that we can gain some understanding of what it is we're actually doing. Ideally, you want to understand sort of the substance of what's going on behind this. But until that time, hey, I can make a table. Can you make a table? Check out my table. We're going to make a table together. Here we go. I'll turn it over to the narrative of the problem. The following information is available about the depreciable assets of Hans Custom Bikes, UCC at the beginning of the year. And now it gives us a bunch of classes, class 1, 8, 10.1, and 12. And then it talks about some additions in class 8 and class 10, and then some disposals. It talks a little bit about class 12. And then it says, calculate the maximum CCA deductible for the current year. So we only have 1 year that we're going to be dealing with here. Should be fairly straightforward. We're just going to take it on a class by class basis. Now, the best way to go about starting questions like this is to set up your table. I've done it in advance for demonstration purposes and to save us time. What you guys want to do is make sure that you've got along the top. I like to put it along the top. You can put it in other places in the questions, but I like to put the rate that is associated with the class. So here we have the various class numbers for the different types of assets that we're going to be dealing with throughout this question. And then we'll start with an opening balance. We'll have additions, dispositions, and then we'll have a balance before we make any adjustments. Sometimes people like to do additional subtotals throughout. Knock yourselves out. Eventually, you're going to develop your own style. But I'm going to try and show you guys as many ways to approach these things as I can. But they're all very, very, very similar. Sometimes you were missing a little bit of a like a subtotal here and there. So we've got our 1/2 net amount. We're going to deal with our UCC before CCA. That's a subtotal. Here's our calculation for CCA. Here's if we have to bring back in 1/2 net amount. And this is UCC at the end of the year. Now, keep in mind, this problem takes place, as far as we know, in the year 2020. It doesn't state the year in the narrative of the problem. If it doesn't, you can assume that it's taking place in the current tax year or the most recent tax year. We can't do anything for 2021 because we don't actually know anything about what the rates are going to be for 2021. So make an assumption that this is the year 2020, which means we're not going to have anything weird like the half-year rule that we're going to have to apply here, right? What we're going to do is just do some straight up 2020 accelerated investment incentive CCA calculations on a class by class basis. So the first thing that you should really be doing in a question like this is you establish your table by taking a look at how many classes you've got. It looks like the beginning of the year, we've got 4 classes. We've got class 1, class 8, class 10.1, and class 12. Now I know that there's going to be some additions here. I guess I can blank that out for now. So what you would do is then add in all the opening balances. So I'm going to run across and go opening balance 1, opening balance for class 8, opening balance for class 10.1. That's a funny balance for that, by the way. And then 42,000 for class 12. No problem. All of this information has now been properly input into our table. Next up, we'll take a look at additions during the year. So class 8 office equipment is what's up first. So class 8 has additions of $10,000. I'm going to plug that in like that. Done. Next up, we have class 10 automobile, a 2020 Dodge. It states that it's class 10. It literally tells you right here it's under 30 grand, so it would be in class 10 and not a class 10.1 asset. I look over here to my left and I do not have a current class 10. I have 1, 8, and 10.1. Class 10 and class 10.1 aren't the same. You can't mix them together. You'd be wrong. Don't do it. So I'm going to set up over here a class 10, and I know that class 10 is a 30% UCC declining balance rate. So there it is. I've got my class 10, and I'm going to add $18,000 into my class 10 for the Dodge. All right. I'm also going to take a look at my disposals during the year. Equipment with a book value of $10,000 is sold for $15,000. The original cost was $30,000. Guys, there's one totally useless number here, and the totally useless number is, of course, the book value. The book value doesn't have nothing to do with nothing, all right? It's not really relevant to what we're going to be doing here. What comes out of the equipment pool, and this is class 8, right? Class 8 is where general equipment goes. What comes out of the equipment pool is the lower of cost or proceeds. Proceeds is 15, cost is 30. The smaller of those two things is 15,000. That is what's going to come out of here, like so, minus 15,000. I'll deal with the rest of it later. 2019 Toyota Camry is disposed of during the year. It's disposed of for $36,000. It actually costs $36,000. I don't understand how that works, and I don't care. I'm just going to take those numbers and put them in here. Now, we know that that has to be a class 10.1 asset. How do we know that? This 2019 Toyota Camry has to have been the class 10.1 asset. Remember, here's class 10.1, guys. Each class 10.1 asset has its own class 10.1 pool. So you can't have multiple passenger vehicles above 30,000 in the same pool. You would have multiple class 10.1s. Because we only have class 10.1, we know it has to be this Toyota. So we're going to take it out of that pool. Now it says it was sold for $36,000. It cost $36,000, but none of that is relevant. It doesn't matter. We could sell the car for $1. We could sell it for $6 million. It's not going to affect what the CCA is here. All I'm going to do right here is I'm going to write sold. I'm not going to write the amount that it comes out for because it's totally irrelevant. Hopefully I'll be able to explain why as we progress through things. I just want to get the information from the narrative in here. One of the class 1 buildings now is also sold. For $150,000, it cost $100,000. Oh my God. So the lower of cost or proceeds is going to come out of class 1 here. And the lower of cost and proceeds is 100,000 because the cost is 100 and the proceeds is 150. So this is what, I got to write then as negative. So there we have our information. I don't think there is anything else we need to know other than the class 12 balance relates to computer application software for the entire company that was purchased in the prior year. That makes sense. It would be rare that you actually had a balance in class 12. Most class 12 assets are 100% depreciable in their first year. So normally you don't have an opening balance, but because this was computer software and the half-year rule applies, you do have an opening balance. Look, it doesn't really matter. All it means is we're going to deduct everything in the current year. So let's go through class by class. First up, we're going to take a look at class 1. So we started at 120 and we had a disposal of 100,000 during the year. I'm going to come up with my balance before any adjustments like so. It's 20,000. I can actually do that for all of these classes. And I'll do that just like this. I would highly recommend that when you make your own tables, you populate them with these formulas to make your life a little bit easier. Some of them don't apply to specific classes and can get a little bit confusing. So be careful about how you apply them. But that was a simple addition and of the various numbers in the columns. And this should hold true. So the balance before any adjustments in each of these classes so far is 20, 70, 25.5, etc. Okay, this is good. Now, the 1/2 net amount. So I've got this highlighted in yellow and I have a little bit of a comment to state here. We're just going to keep working on class 1. So with the 1/2 net amount, remember the 1/2 net amount is an amount that you're going to basically be adding in here. It's going to be 1/2 of any net additions during the year. Because this class has net disposals for the year, we do not do anything with the 1/2 net amount. It only applies when we have positive net additions. We do not have that. We have dispositions. This amount is going to be 0. Therefore, we are now going to do a summary again. And our UCC before we take CCA is just 20,000. This makes sense. I had 120 and I took 100 out of it. I have 20,000 left. Because I don't have additions for the year, I'm not going to boost this up. I don't get a special accelerated deduction for the year. So my CCA is going to be based on the balance left in that pool, and it's $20,000. So my CCA for the year should be equal to $20,000 times, I'm going to say 4%. Should be $800. I think that's correct. There is no net amount here that I have to deal with once again. So now I'm going to summarize these items. My closing balance is 19,200. This makes sense. So many people just memorize flat out the formulas and they don't understand what's going on here. Let's just take a look. I had 120,000 when the year started. I took out 100. That means I've got 20 grand left of undepreciated capital cost. That's the total balance that I'm going to be able to depreciate over the coming years. This year, I'm allowed to deduct 4% of that. That happens to be $800. 20,000 minus 800 is $19,200. That's my closing balance for this year and will be the opening balance for next year. Let's take a look at class 8. So class 8 is a 20% declining balance. We had some opening balance, we had additions, and again, we had dispositions. Again, our net additions for the year is 10,000 minus 15. It is negative. If we have negative net additions for the year, we don't do anything with this net amount. It has to be a positive value for this to be applicable. So all I'm going to do here is I'm going to say, well, this is just 70 grand. That makes sense. I'm going to take my CCA for the year. This is going to be equal to 70 grand times the rate in the pool. It should be negative, by the way, because we want this as a deduction. And it looks like it's negative 14,000. I can then do a little sum by dragging this over. My closing UCC for that particular class is $56,000. Now I'm going to take a look at class 10.1. 10.1 has a bunch of weird rules associated with it. Class 10.1 is a bit bizarro. So I'm going to highlight this note. This is something that I talked about already, but it says that it indicates that we only take half of the net amount if the additions are greater than the disposals, right? For classes 1, for class 8, even class 10.1, this isn't actually the case. We have greater dispositions, and therefore the net amount is going to be 0, which I've indicated here, and we've already sort of addressed. Now, next up, we're going to take a look at class 10.1. Class 10.1 starts off with UCC for the year of 25,500, but then the car is sold. So here's how class 10.1 works. There is no recapture. There is no terminal loss. All that happens is in the year that a class 10.1 asset is sold, the amount of CCA that can be deducted is equal to 1/2 of what would otherwise have been determined. And then the balance in the pool goes to 0. That is also a key point to make here. So my UCC before CCA doesn't really matter. I mean, it does equal 25,500. It doesn't matter. CCA is going to be based on that 25,500. So my CCA for the year is going to be calculated as follows. So there's, like, as is stated down here in the note that ties into this little green bit here. It doesn't, 10.1, no terminal loss, no recapture. You're allowed 1/2 of the CCA if the vehicle was owned at the end of the preceding year. In this case, we can take 1/2 of the CCA, which would have been 25,500 times 30%, and then we'll multiply that by 1/2. The amount is 3825. Let me type that in here. This is going to be equal to this times our rate times 0.5. And I should have written that in as a negative number, which I will do right now to make that right. Now, this is another area where students make mistakes. They're like, okay, well, the UCC was 25.5. I took a CCA of 38.25. Therefore, it must be, my closing balance must be this. No, you don't have a car anymore. You have no car, and therefore you cannot have a UCC balance. This balance is 0. There is nothing here. Make sure that you take note. I always ask about class 10.1. I will ask about it on your midterm. I will ask about it on your final. You need to know the rules associated with class 10.1 and how to calculate CCA in the year of disposition. That's it for class 10.1. Let's take a look now at class 12. So class 12, we had an opening balance of 42,000. We have no additions. We have no disposals during the year. We have a balance before any adjustments. There are no adjustments to make here because we do not have any net additions for the year. So there's no 1/2 net amount that we care about. Therefore, our UCC before CCA is $42,000. Our CCA for the year, hey, I got a balance. I'm going to multiply it by the rate in the pool. The rate in the pool is 100%. So this equals 42,000 times 100%. Oh my gosh, it's -42. I'm going to say this equals the sum of this. My balance should be 0 in this UCC pool, and it is. Basically, everything was written off because it's 100% deductible now. I made a little note to it right here. No additions to class 12 during the year. The entire remaining balance is 100% deductible because it's a 100% declining balance rate. So our final class here is class 10. We had additions during the year to automotive equipment of $18,000. There were no disposals during the year. So we have balance before adjustments of 18. We are going to then add. We do finally have net additions here. This is the first time where we have net additions. Our net additions for the year, a positive value of 18,000. So we're going to bump it up by 1/2 of that so that we can come up with an accelerated CCA deduction for the year. So here we have our UCC pool, which has been artificially inflated by 50%. It's 27,000. The amount of CCA is going to be equal to this times 30%. Another mistake here is that people will take this number and they'll multiply that by 150%. That's the reason we added extra in, so you didn't have to do that. Just take this, and again, it should be negative because it's CCA. Our CCA for this class is 8,100. The amount that we added in here, I'll put it in a nice little color like that, has to come back in over here. So this is going to equal the negative amount there. So we added it in, we're taking it out, added it in, taking it out. And our closing balance is going to be equal to the sum of these guys right here. That's our closing balance, which makes sense. Hey, I started with 18,000 and then my CCA is 8,100. I should have 9,900 left over. Is this a complicated way to go about it? It's fairly straightforward, I think. So that's it. Oh, 1 second. Oh man, trying so hard to do this. That's it for this question, guys. Hopefully that was helpful. Stay tuned for our next video when I talk about, well, more of the exact same thing. Just plugging numbers into a spreadsheet. Welcome to Spreadsheet City, guys. All aboard the Freight Train Express to Spreadsheet City. If you guys don't like, one more little hot piece of advice after all this, if you don't like spreadsheets, accounting is the wrong occupation. That's it. Bye, guys. Great job. Okay, so now I can answer questions for you about this one. Guys, what kind of questions do you have for me? Why did I lose so many people?
I see that spreadsheet again. I was just looking at.
What's that?
Can I see the last spreadsheet?
Yeah. There it is. Is it up? There it is.
Oh, there it is.
Okay. Waiting for some questions, baby, tonight. Waiting for some questions, baby, come on. Come on, guys. Thanks for the help. T4 confidence skyrocketed. Good, Rohan. I'm glad to hear that. Head out to your two. You got another class? Brutal. All right. Well, good luck with that one. Have fun. Thanks for showing up. Okay. Thanks to everybody out there for joining us today out there in Radio Land. I really appreciate it. We'll see you guys next week for week 5. Screaming towards reading break here, guys. We're getting so close. So thanks for your patience. You've been great. And we'll see you next time. Later, Gators. That's it for this one, guys. But stay tuned. I will return. Hey guys, thanks for watching this video. Did you find it helpful? Well, there's plenty more videos for you. Check these ones out right up here. And if you really found this helpful and you want to be updated of all the latest videos, why not hit subscribe? It's that button right over there. Check it out, guys. See you next time.